Let me just show you the chart of the yields. All four of these securities have been issued this year.
Okay.
Okay, and this is a chart that shows their effective yields at different points in time since they were issued. So the first one that came to market was STRK. That's the ticker symbol. These trade like stocks.
Okay.
So they trade every day, just like Tesla does on the stock exchange.
Sure.
And when it first came to market, it was yielding about 10%.
Mm-hmm.
And you can see that over time the yield went down. The yield went down because the price went up.
Right.
Because it pays a fixed rate, and we'll get into the details in a minute as to how this all works. But at one point, it was yielding just above 6%, and since then, it's gone back up a little bit. The price has come down, and the yield has gone up.
Right.
It's now yielding over 8%.
Okay.
There was another security that came to market, STRF, that came to market. Its yield was around 12, and you can see a similar kind of trend, kind of moved down in parallel and then moved back up a little bit.
Right.
And then two other more recent ones as well. So we'll get into the details here. So what are these different securities? Well, there's four of them: STRC, STRD, STRF, STRK.
Okay. I like the RK one.
Yes.
Yeah.
Yeah, that one's going to behave much more like a stock.
Well, it's because of the RK part, you know.
Yes, of course.
Yeah.
Yeah, this is stretch, this is stride, this is strife, and this is strike.
Okay. And I also like strike better than strife.
Yeah, right. Yeah.
Okay.
Okay. Now, this is actually a very important chart.
Okay.
Because it kind of shows the yield on different investments.
Okay.
Over different time frames. And we in the fixed income world, you sort of look at time in the terms of duration.
Sure.
Basically, how long does it take to get your money back?
Right.
Okay. So a leveraged loan kind of investment that might be yielding 6.5, almost 7% might have a very short duration.
Mm-hmm.
Okay. Junk bonds might have a shorter duration, preferred stocks, mortgage-backed securities, long-term treasury bonds. So there's different time periods associated with different investments.
Mm-hmm.
And there's something called, as you know, the yield curve.
Sure.
And it shows the yields over different periods of time. Typically, in a normal environment, the return or the yield on a short-term investment is lower than the yield on a longer-term investment.
Exactly.
But that's not always the case. Sometimes the yield curve inverts, and it's the opposite.
And people who my channel, we've talked a lot about the inverted yield curve last year. Yeah.
Yeah. Now, these securities are positioned so that they have a higher yield for a given duration than basically anything else that's out there that's worth investing in.
All right.
Okay, so we'll talk about the details here in a second.
And typically, of course, when you have a higher yield, you generally think higher risk.
Yes.
Okay.
Yes. Not all the time. Now, risk is an interesting word because risk can mean interest rate risk.
Right.
And certainly on this previous chart, you're taking more risk here because the duration's longer. So if interest rates go up, all things being equal, the price of these securities should come down.
Right.
And vice versa. If interest rates decline, then the price of these should go up. So that's a form of risk, but it's a reward potentially too if rates go down. Now, there's always the risk too of losing money.
Right.
And one of the things in the fixed income world is this idea of which investment is more senior versus junior. In the event of bankruptcy, which ones get paid off first?
Yeah.
So they've structured this so that STRF is the most senior security, followed by STRC, STRK, and then STRD. Okay, so there's a hierarchy of which ones to get paid off first in the event of a bankruptcy.
Got it.
And if you're the equity holder, you're the last in line.
So, so in this particular case, you're having, this is just the security issue. This is nothing to do with the interest rate or just which one gets paid off first.
This is just showing the seniority.
Okay.
Yeah. And then also on this chart, it's showing a volatility. So these investments have also been designed to be more volatile, medium volatile, and then really almost no volatility or very little volatility.
I see.
Okay, I can't say no volatility because these do trade on a stock exchange, so there will be the volatility just every day of trading.
Sure.
But this one should be very move within a tighter band than STRK does.
Okay.
Okay, and I'll show you why in a second.